Hello everyone, this video is a recording of a recent stock market discussion. To stay up to date with FLI Raleigh's future webinars and videos, please fill out the Google form in the description as well as subscribing to our YouTube channel.
Our first question is going to be, do you think it's legal for people to mass purchase stocks and hype certain stocks just like we saw with Wall Street bets?
I think in both cases, it depends on the degree to which the action is being done. I think there's a bit of nuance with the first one, mass purchase of stocks. If it's like a big community like Wall Street bets, I think it should be illegal because that's affecting the whole market. And the same thing with the second one, when someone with great influence like Elon Musk tweets something and he hypes up a certain stock, that's affecting way more people than himself. So I think that should be illegal.
On the other side of that, these people on the internet manipulating the market, you can say that it's obviously manipulative and, it did screw some people over. But on the other side of that, Wall Street kind of manipulates the market as well and screws a lot of people over as well. So it's kind of a double-edged sword there.
Yeah, and I think that's really what started this whole controversy, right? Because as Peyton mentioned, it's the Wall Street people, they're kind of manipulating the market as well. And that's basically what influenced these Wall Street bet people to try and manipulate the market themselves, kind of like they're fighting back. So that's a really good point you made.
Yeah, I also agree. I personally think that it should not be legal because just mass purchasing certain stocks can cause the market value of many shops to just fluctuate a lot, and it can just completely change the outcome of the market and create a whole set of other problems. So I think that it shouldn't be allowed.
Well, personally, I disagree with how celebrities or influencers or just people with a lot of outreach, how giving their opinion, yes, of course, it does manipulate the market to an extent, like Elon Musk did. But that is something that happens because of their cult following. That is something because of the influence that they've amassed. They've worked for that. And I think that should be allowed because on the flip side, the CEO of a huge company, if they get into a personal scandal, like they're, involved in adultery, they cheat on their wife or something, that, despite it being completely separate from the company and from the stock, could affect the stock price, as it has in the past many times. So I think that these people, like Musk, that, have developed a cult of personality and a lot of popularity amongst the masses, should be allowed to, express their opinions, and these opinions, giving their outreach, should be allowed to influence the masses.
Yeah, that's a really good point you bring up, because it's not like they're directly trying to influence them. It's more like you said, they've gotten to that certain position that they're in. It's just their words and that sort of quote unquote cult following is what led to it. So it's not like they're really directly trying to do it, but it's just an effect of their influence. It's a really good point.
If I may add my 2 cents, this should be allowed as long as the short selling is allowed on the market, because this is definitely the opposite, of the short selling. So if short selling is allowed on the market, then this also should be allowed on the market.
Yeah, that makes a lot of sense because, as we mentioned before, short selling is a really risky idea. And once again, it does influence the market. So that's a good point, that if short selling, a sort of practice that's looked down upon, is allowed, then this should be allowed as well. And in the chat, we have someone saying it's hard to control these big communities because no one knows how to regulate it. And that's a really good point as well, because stock has always been around, but with all the digital innovations that's happening in recent times, it's hard to really control what's going on. It's a lot of good points.
So what do you all think the future of stock trading looks like?
I guess in my opinion, I feel like it'll be a lot more accessible as time goes on because anybody can get involved. But it also, there's a lot of risks of getting involved in stock market. Right now, it's trendy and people want to do it. Well, there is real risk of, investing, and a lot of people could lose out. But it is giving a lot of people new opportunities that they may not have had before.
Well, I think that making it more accessible, I believe that it should be more accessible, open to more people. That is going to lead into much higher risks. People with a lot less experience will go into the market. So a lot of people will be negatively affected, just due to a lack of experience or maybe due to a lack of sufficient capital to properly go into investing. I think there should be perhaps regulation into who gets involved, maybe at what age people can start investing, because if it's just completely open to everyone, given how accessible it is from a technological point of view through just an app on your phone, a lot of people who maybe who can't afford to lose a lot of money will still get into investing. And the problems that we see with people gambling, we'll see that develop with investing.
Yeah, I agree. But as far as age limit, I know at least Robinhood, you have to be a minimum of 18 years because you have to have a valid social security number and everything. If you're under 18, I think you can do under your parents' account. But as far as that, yeah, there is a minimum age. Okay, someone said, we will see more community trading of certain stocks, and we might see these events with GameStop again. Yeah, that's probably the one fear for the future. If the Wall Street page in Reddit, if it has the potential to drastically change how the outcome of the stock looks like. Yeah, in the future, we have to find some way to regulate it. That's true. It's highly manipulated.
Yeah, I agree with what was said in the chat. I think the future of stock trading will mostly be characterized by risky and volatile trading.
Yeah, that's true. And as far as the new generation Z, I know our school, most schools or a lot of schools, they don't have anything with investment or any finance classes. I mean, some schools do have electives and classes, but not all. I think in the future, those classes will be more prevalent, and I think they'll have a positive impact on educating the younger Gen Z. And I think we also have to pay attention to cryptocurrency. I personally think that's going to be hiked up in the future because I know Elon Musk, he bought billions of dollars worth of Bitcoin. And as you saw, I think it was 3 times Bitcoin shot up, and now it's more than higher than ever at around $45,000.
What scenarios should the U.S. government step in to regulate stock market activity? What do you guys think about this? Like in the past, the government has stopped trading on certain stocks. So do you think they should continue doing this, or what are you guys' thoughts?
I think that if there are super volatile stocks that are just being tampered with by outside organizations, then I just feel like that if there is a huge hit or miss risk about how much money an organization will be able to make, I just think that if there's going to be a certain financial outcome that is going to impact the group of people and the amount of way that they won't be able to trade again, or it just may completely tamper with their financial account, I feel like the government should be able to step in those situations. I think it depends on how volatile it is.
Yeah, that's a good view because if people are trading these super risky stocks, then they may lose lots of money as well. And so the government's goal should be looking out for people's welfare. So I guess, yeah, that's a good point that you make.
Another thing, which I don't know if there's already a system in place for it, but many times, there's companies that mislead investors and just mislead general customers and making a bunch of false claims or inflate their success or inflate their ambition. And then that, makes the prices just bomb up and a lot of people start investing, but then, the smoke screen goes away and then a bunch of people lose their money. So I feel like maybe there already is a system in place, but I believe that the government should be allowed to intervene with those specific cases.
Yeah, so currently the government, there's the SEC, the US Securities Exchange Commission. And so they try to reduce insider trading and that sort of stuff. But I don't know how effective that is. So maybe increasing the use of that and maybe controlling these volatile stocks, that would be beneficial.
Yeah, I think in order to protect more vulnerable consumers, the government should step in cases of volatile.
Yeah, I was just going to ask all of you, do you think the government can literally just suppress the Reddit page, or do you think that's going to come under a lot of backlash because kind of silencing people? I'm just going to say, even though I feel like the government should, because it's kind of unfair, it's just a community to manipulate how stock is, I feel like that can come under a lot of backlash because of kind of suppressing the community.
I also think it would be kind of hard. This is kind of not taking a side, but more of a just statement. I think it would be kind of hard for the US government or any government to step in to regulate stock market activity, especially because it really happens so fast and you can't anticipate any of these changes happening. If
the government tries to regulate the Wall Street bets community, then they should also do something about the big hedge funds, because those people are also manipulating these stocks. So who do you control at this point? You control the big hedge funds or the Wall Street bets community? It's just difficult to tell. How do you prevent something like this from happening again?
I guess to add my view on it, like many people in the discussion have said before, it's really hard to regulate these sort of things, right? And if you kind of look at the whole situation, it really came down to the idea that people shorted the stock, and then other people saw that and said, hey, that's not cool, we really invest our money into this and you guys are just using it kind of like a game. And I think, not trying to take a side, of course, but I'd say, in my opinion, it would be like, if we can, how do I put it, lessen the amount of shorting that occurs, because that's really the main reason this whole thing happened. But once again, these hedge funds are going to do what hedge funds do and just make money for their clients. So yeah, any other thoughts?
Yeah, Sujan, I really like your comment. And just to put some perspective on it, in case someone might not understand, I just want to explain that when you're buying a stock, the company can go bankrupt and you can lose 100% of what you put in. However, when you're shorting a stock and the stock shoots up, like GameStop did, you can lose like 700% or 800% or like more than 100%. So it's kind of risky and different. And also, I think this question really ties back to, can the government and can the trading platforms regulate stock market activity? I think that's a fundamental question that's going to continue to be an issue in the future.
So I understand that it's like the billionaire hedge funds that do this. So how do they borrow these stocks from this hypothetical firm?
That is a good question. I haven't really looked into it that much, but my assumption is that they probably just borrow it from other hedge funds. I guess you'd have to do your own research on that. I'm not an expert on how that area of shorting works, but I would assume they just have some sort of entity where they can just borrow it from, or they just might borrow it from the company itself, right? Like if you're a hedge fund at that high of a level, you might just have ties to the company itself. So you could just ask the company to borrow the stock for a short time and use it that way. But yeah, I'm not completely sure. You might have to do your own research on that.
Yeah, so like in Sujan's explanation, like the hypothetical friend, that would be like a brokerage. So maybe like the hedge funds borrow from like a brokerage who like gives out stocks, and then that's how they do their business.
Yeah, and just to clarify, a brokerage is like some other company that basically trades stocks for other investors. So they trade for their consumers.
And one more question we got from the sign up form before we wrap up, I'll quickly state it. It was, over the past week, the stock market and mainly tech stocks have entered a brief sell-off. Why do you guys think the recent market sell-off events have unfolded? And once again, there's no correct answer to this. However, we just want to see what you guys think about the topic.
I feel like it definitely has something to do with the new administration, and maybe with the fact, maybe it has something to do with the stimulus checks, or maybe it has something to do with with the drive to increase the minimum wage. It's only what I suspect. I don't really know enough.
That's a really good point, because of course with the new administration, like you said, there's going to be lots of different policy changes going on. So that might just influence the way they think the market will work in the future. And yeah, that could definitely have resulted in the sell-off we saw.
Just to kind of add more perspective to this question, I just wanted to talk about like what technical analysts or like fundamental analysts of the stock market have said about this. And so most of them, I don't have definite answers, and it's very ambiguous because none of their opinions are necessarily correct. And it's the whole like thing behind this question, that nothing's correct and there's no right answer, but you can only anticipate what it is, right? So some analysts basically say that there's like recessions inbound. Others say that it's because of like changes in interest rate. And like you said, others say it's because of like changes in administration.
Oh, we just got one in the chat. Maybe because of the pandemic, more people are investing in medical stocks and less in tech stocks. Yeah, that makes sense, because like with the recent rollout of the vaccine, more people might be investing in like Pfizer or those companies. And so that's why we've seen a trend in people selling off their tech investments. Okay, yeah, let's go to one last question. So what do you think would be the best thing to do if one of your stocks is dropping? Is it best to hold or sell it off right now? What do you guys think? Just so you know, there's no right answer.
I think it kind of depends where the stock value is it's about to predicted where it's going to go, because if it's going to keep dropping at an even faster rate, I would sell it before my outcome gets even worse. But if there's like a small potential that my stock value may increase, then I would probably hold on to it if it's going to be like a small increase or if a small decrease, and then it might increase a little bit more. I think it kind of depends on how volatile that stock is for me.
Yeah, I totally agree. Like, you got to know the trend, and chances are, if it's more of a steady stock, like like say Apple per se or Amazon. I mean, it's not to give you recommendations, but chances are that it probably can't drop forever. So maybe you can buy it back lower, opposed to, let's say there's a new pharmaceutical company, and if it just plummets, chances are you don't never know if it's going to go back up. So you might as well sell. I mean, this is not to give advice. This is just my own opinion.
If I may add, what I will say is, basically we have to look at the news as to why the stocks are going down of a particular company. So stock markets, they are highly emotional. Even on a slight news, the stock may drop down considerably. So we have to look at the news and analyze as to, is it going to be temporary? Is it going to be a little long term, or what kind of news it is, and how it's going to impact the company itself and the company's profitability. On that, having said that, we also have to take into account, are we investing in the stock short term, mid term, or long term? What's our position of the stock? So after analyzing all those different angles, then we can decide as to whether we want to keep the stock, sell the stock. And the third most important thing is, how much of the loss can a person take?
Yeah, I agree. You need to know your time frame for investing, and your risk tolerance plays a huge role. So maybe if you don't have a high risk tolerance, maybe because you just started and you want to be extra careful, maybe when it decreases, you kind of might want to sell it as soon as possible, at least when it starts dipping to make sure. But maybe when you're more experienced, maybe if it goes down, that's just an opportunity to buy more stocks at a lower price. And then eventually it can't go down forever. So you gotta basically, and research helps a lot too, like you said.
Agree. And Parsh, if I may just add another term, on what you said, it is called the dollar cost averaging. So basically, when the stock goes down or a little up, and if you want to invest, it is called the dollar cost averaging, DCA.
Yeah, so I just wanted to address the chat we got, and it's basically talking about how Pfizer and Moderna have actually gone down recently. And I just did a quick search of the actual stock charts of both, and I was looking at it from the start of the pandemic. So I think it was declared a global health emergency on like January 30th. And so relatively, Pfizer has actually it has gone up for brief periods, but it's stayed relatively the same. Like it's the same price as when it started. And Moderna has actually increased by 5 times, I think, something around there. And it just shows how crazy it can be and how volatile it is, how risky it is, how you don't know what's going to happen. Because you would think that these companies developed a vaccine to fight the greatest threat at the time, and their price would be really, really high. But it's crazy how they can actually go down, and it can be different, and you don't really know what's going to happen. Also, to go back to our question, I think that this was the main question that the hedge funds are actually facing when they were put up against the short squeeze. So they were trying to figure out what the level was where they were gonna finally take the losses, sell the stock, and try to pay it back, versus they were gonna hope it goes down again, because remember, they shorted it.
For me personally, I know I'm a very beginner investor and I don't do much big investments. So if a stock goes down, of course, I feel oh no, I'm gonna lose a lot of money. And so in my opinion, yes, I would sell. But with that being said, if it's a big company, let's say it's Apple, most people buy iPhones, and they're not a company that's going to vanish in the next day. So just knowing that a company is going to be there and its longevity, that might give you some hope into knowing that, okay, if it falls down now, then there's still a chance later on. That's just my take on this.
Yeah, Suchir, I really love the.
Yeah.
Sorry.
Yeah.
Okay. Suchir, I really love the way you said that. So basically, it kind of relates to Warren Buffett's quote, where that basically says that you should have faith in the company you would be investing in. I think that's a really central idea. And there's also this other like point of view where it shouldn't necessarily be just about profit, and you should have some type of belief in the company you're thinking about like trading.